The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi everyone, sorry to disappoint you. This is Basil Chapman sitting here for Tommy O'Brien, and it's just taken a couple of days off. So my pleasure just to sit in here. I'll probably also be doing my show at 10 o'clock. But in the meantime, let's just do it. I cannot do what Tommy does. He just knits together so many of the fundamentals together with the technicals. I'll do the technicals. So here we go. The Dow closed on Friday, 34,935. Let me just show you a cut. Well, actually, let me run the numbers. The Dow futures are up 84. They were up quite a lot higher. Now they've pulled back some, but still up quite nicely. The S&P futures were up much higher. Now they're up 16, still pretty good. I'll do the QQQ for the NDX 100, up $1.83, $1.63, sorry. So we've got the futures up quite nicely. I had a technical indication on Friday where the Chapman Wave trend gauge was quite high. That said, there should be a 9 to 11 point rally in the E-mini futures within the next 2 days. Well, we got that last night. So now with that as kind of our look back period, what are we looking ahead? We're looking at a pattern that I call that it's within the Chapman Wave terminology. This is the pie pattern. Look, you've got your left side, you've got that arch on the left. You got a sharp V-shaped pattern where someone took a little piece of the pie, and then you've got your right shoulder, this rotation going to the downside as it rolls over. However, within the context of this particular pattern, if it goes even just a little higher into the 35,200s, 250s, preferably 35,300s, that just negates this pattern completely. But what this pattern does, it says that as the price was moving up and then making this arch formation, whatever it took from 35,090, there was this really sharp pullback. It was Friday 2 weeks ago, and then Monday 2 weeks ago, Monday, not last week, the week before, 2 weeks ago, you got that sharp reversal at 33,741, or really a one-day pullback, even though the Friday closed lower. It was just the next day because it made a new high. It was the nenext day that it went down to the 33,741 level and then ran back, and it went to slightly higher highs. Within that context, I just want to show you something. The MACD has turned down, but it's still positive. The stochastic has turned down, but at 80%, it's still positive. It was 90%. 90% is very positive. On balance volume, the blue line did turn down. This is the same daily pattern, except here I've included the MACD and stochastic and the on balance volume. However, and the 200-period moving average, within this context, you've got the 9 period still above the 14-period moving average, and you see these light green numbers here. This is Chapman Wave. These are automatic resistance and support lines. Late Herb, who did this for me, I should have had him change that to red, because resistance I always have is red and green is for go. This is the opposite way around. I did have it in the 120-minute chart, and it just shows you from 35,236 in the 120-minute chart to 35,270 in the daily chart, all the way up to 35,520s. There are automated resistance levels. Now, what happens sometimes if there are enough of them, instead of being a sharp repellent zone, they actually become a magnet. And that's where the real test of strength is. Are you going to go above all of those, or is that going to be your stalling area? I don't mind if it's a stalling area. Look, 34,900 to 35,300, 400. That's fantastic action. So that's going to be important. More significant here is in the S&P. So just briefly, let me say, under 34,600, 34,500 this week says, be careful, we're in a consolidation phase. And then you get the pie formation where you get the second part of the arch coming down, and this becomes current. It fails automatically with a V-shaped breakout if we start to trade in the 35 certainly 35,300. Just get rid of that. Now you're looking at a pattern that resembles somewhat the S&P, because look at the S&P. Just for the moment, I'm going to go to the ES, that's the continuous contract, just to show you something, how sharply it's gone to the above the left side high that was for the Dow. That was at 35,092, I think it was. And look how much higher we are here. So there's a much larger arch potential, but it's just a potential. Not only that, you had a doji candle last week, but you made a fractional. Look, let me just show you something. This is last week, was the week of the 30th of July. That ended on Friday. In the continuous contract, 34. This is difficult to see. 34,222.50, and overnight we went to 44.19. We haven't gone to a new recovery high. Now, what that does is look at this weekly chart. This is in the Chapman Wave methodology. What we're always looking for is from an identifiable low bar, is to merely count each successively higher peak. I say merely because that's all you have to do. You count each successively higher peak. They can go all the way to 7 peaks higher, but it's that fourth peak alphabetically A, B, C, D, E, F, G. It's at the fourth peak, peak D, that other things can happen. Just keep it as simple as possible. Well, we are only in leg B. We haven't, if in August, anytime in August, there's a new high above July's high, that extends leg B. It says in 2021, we should still get to higher peaks, because we should get to, in a buy mode, at least in the Chapman Wave methodology, a D. Keeping it as simple as possible. Key support, I'd say, is 43.50 to 43.30, that whole area. That's going to be really important. A break under that says, uh-oh, you're in trouble. Now you've got yourself a consolidation. It should last a couple of weeks. So that's what we were looking at. I'll just do this one more time to show you. This is the S&P cash from Friday. Look at this little pattern. We stuck it in a little bit of a range. A nice consolidation at all-time highs. All we're looking at is 1 penny above 44, 49.27, and you've extended the weekly leg D and the monthly leg B. Amazing that we should be there. 21.91 was the low back in March of 2020. And here we are at in the 43.90s. All right, let's get on. We're going to look at the QQQ and the X100, and that's going to be important as well. Why? Because there's this candle that I call the Chapman Wave Roman candle in the daily chart from was it Wednesday, Thursday, Friday? Tuesday. From last Tuesday, and my rule of thumb is if whatever candle you're looking at, if it's Chapman Wave Roman candle within 2 sessions, if there is a move below halfway into the lower wick, then you're probably going to retest the low. In this case, the low was 360.16, the low of the 27th. Well, on Friday, we went down to 362.41, and halfway is, I would say, just on the border, because 362.30 is about the halfway marker. So we just saved the day there. And now we're trying to rally up, and you've got the Chapman Wave falling axe formation right here. If there is a close above 367.68 anytime in the next 2 days, that says watch out for 368.89 all-time high in the QQQ will be vulnerable to a upside breakout, and that's important. IWM has a lot of resistance. It's up at 222.71 right now. It's got a long way to go. And look at gold. Gold is pulling back. It's down $6. It's just in this range. Stop breaking down, stop breaking up. I'll be back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Hi, folks, we're back. Basil Chapman sitting in for Tommy O'Brien, Tommy Jr. That is, Tom will be back. Tom O'Brien Sr. will be back this afternoon. We're looking at the Dow futures up 17. Just let me show you, I was talking about how important those peak Ds are in the Chapman wave methodology when you go from a buy signal to a buy mode. Look at this, from the low that was made around about 2 o'clock this morning, around about the 43, call it 72 area. You went peak A, peak B, peak C, peak D, pulled back, went to the 200-period moving average, popped to a leg E, and then pulled back sharply, becoming a peak E. And look at this, how long we hung around for an hour, a couple of hours from from about 5 o'clock. We got to that 200-period moving average and was only at, wait a minute, 4. Was that? Oh, sorry, that was on September. That was on Friday. And then we finally broke out when the futures opened. Let's see, closed at 4 o'clock. So that's the close. Then we peak A, B, C, D, and pull back at about 8 o'clock. There's your D, pulls back, crosses positive again, goes A, B, C, D again. That was at 3 o'clock in the morning, around about 44, 18, 19. Pulls back to the 200-period moving average, and that's what we're testing now, but it's a rising moving average at this particular point, so it's going to be important. I'll just make it real clear. If the E-mini at any point starts to trade for about 35 minutes above 44.22, it's at 44.06 right now, so it's got a long way to go. In fact, I'd even say 44.16 would be good, but really 44.20 to 22 is, for the day is really what you want to see to be able to extend the rally. That's going to be important. A break under 43.97, a close on any 3 10-minute bars that's over 30 minutes says, it's just stuck in a range. But that's what it's looking at here as a 10-minute chart. So let's get back to our story. And what we're looking at here is crude oil. Well, first I'll finish gold. Gold, you can see in the monthly chart, did break out from the resistance Chapman wave inside track repellent line. But then it came right back and it's testing the 9, the 14-period moving averages, the MACD's week, stochastics week. This is the monthly chart right here. But it's holding quite steady, and that's really important. So it doesn't have to do much, but it's consolidating huge gains. It took it all the way to 2100 in the continuous contract. Then the MACD turned down, stochastic turned down. So right now it's in a consolidation phase. If you look at the weekly, it says, hey, I can make this even a smaller rectangle between 1850 and 1750. Yep, it's 100 points, but let's make it even narrower. I can make it right there to 1760. Let's call it 1770. 1770 near term over the next 2-3 days. That's going to be important support. And I'd say 1855 in the weekly chart. That's going to be the thing to watch. In gold, you've got peak C1, C2. That's almost like a peak D. And then you pull back. We spent some time last week doing my show a couple of times. And when I did Tom's show at 3 o'clock on Friday, I discussed this pattern here that gold made a little double top, stuck in a range, but it's not breaking down. It's not breaking out. That's the whole thing. Gold needs to get to 1865 or higher to say, I am now out of this range. I'm moving to higher levels. Otherwise, I'm kind of stuck. But it really needs to, on the shorter term, 1780 is really kind of its support that it needs to hold. And the silver right now, I'm going to do silver. Silver is down 14 cents at 25.40, also stuck in a range. This one's a little, so many times, silver acts poorly in relation to gold, and then suddenly it looks good, and it even looks better for a moment, and then it goes back to looking worse. And that's where it is right now, stuck on this orange line. The 200-period moving average, it really needs to get to the 2620 area. Really, 2650 is what it needs to get to say, I'm pushing to the higher part of the range. Right now, it's just stuck. It's doing okay. I don't want to spend time on this. I'll do this in my show, chapter we've inverted falling axe formation, how you can go 5 or 6 weeks underneath this blue line, and then when you pop to the upside, that's really important. Hasn't got there yet. I wanted to show you something very important. High-grade copper. High-grade copper's had a high-level consolidation. It's gone from a peak F in the chapter, even the weekly chart on the continuous contract from 4.885 down to a low of 4.2. Was it 4? Yeah, it broke that, and then it went to 4.08.55. Right now, it's trading at 4.496. I would say to you that to break out above the high that was made in the daily chart of the 27th in the continuous contract, 4.6275, to go above that, that's going to take a lot of effort. And what it needs to do and then hold, it needs to get into the I'd even say above that 4.65 range. If copper this week can touch 4.65, that's going to be really important. So a question came up. Let's see. There's a question, please. What purpose do you serve in bisecting ESU 10-minute chart in detail? What purpose do you serve? Oh, yeah. So let me just show you something here. That's a very good question. Well, first of all, if you trade the E-minis, you want to be able, if you're trading the 1 or 2 minute or 5 minute E-minis, you want to look at the longer term, which is 10 minutes. So just think of it, the 1 or 2 minute chart is like the daily, the 5 is like the weekly, and the 10 is like the monthly chart. But what I do like to see is the overall trend. And what really is important about this is look at the importance. I'm going to squash this, make it tight. There you go. Look how important the 200-period moving average, this thick pink line is. I'm even going to go back a little further because I can tell you that it became tremendous. Look at this. It's resistance, it's support. It makes what I call a sine wave action over and under and over and under until it breaks to the upside. Once it starts moving up above it, you don't even have to care about it. You can look at other moving averages, other techniques. But it went all the way, this is whatever date it is, let me tell you, at 1330, that's 1:30 on the 29th of July, it had 4422.50. A little top there, a little double top, and then it pulled back in this arch formation. It went right through the 200-period moving average. Before, it kind of hung around a little bit. This time, it went right through. That became resistance, and you could forget about it because it went all the way down to the 43.70 level. Right there, this quadruple base, flat line base right there. That was incredible at 40. I remember talking about it last week. 43.70.75. It hit it. I mean, out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Out of 20 10-minute bars, that's 200 minutes, it almost touched the line about 10 or 12 times. That's really important. So I love to use the 10-minute because it gives me a sense. It actually gives me a sense of a daily chart, even though it's just a little mini 10-minute chart, because of the power. When it's, look at this, it moved up from 22, that's 8 o'clock on the 28th. It moved all the way up to the 29th at 1:30 in the afternoon. No, 1:40, almost 2 o'clock in the afternoon. These are big moves, and it's only a 10-minute chart. It's how I often look at the 120-minute chart. If you can analyze a 120-minute chart, you can sometimes get a whole week's worth of upside or downside move if you can correctly identify the trend. So in answer to that, I'm going to say it depends on what time frame you're using. I know that there are a lot of people here. I know that from the emails I get and from the texts I get and from the YouTube questions and from emails about different stocks trading in 1 and 2 minute time frames. There are a lot of people that are doing intraday trading. So I love to add this to my bigger picture. So, that's the break. So we're going to talk about this in a moment. The S&P futures up 18, and you've got this double bottom H pattern here in the 10-minute chart. We'll see if there's a break into the 44.16s by 10 past 10 this morning. That's going to be important. I'll be back in a moment. Basil Chapman sitting in for Tommy Jr., Tommy O'Brien.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
For Tommy O'Brien, this is Market Kickoff. I'm a little embarrassed talking about the 1-minute chart, 2-minute chart, and 10-minute chart because Tommy always looks at the very big picture. I know that he has some stocks. I know he's spoken about Disney many times. I believe they have Disney in the portfolio. Disney trading at 176. It's had a really big move from the 79.30 low of March, screamed up to 203. back in March of this year. So March of last year to March of this year, huge move, more than a double. And now it's just consolidating big gains. And of course, I think this the new variant is really going to be a bit of an issue there, but it's holding quite steady. So looking at that, a couple of things I do want to talk about looking at the bigger picture. So today I believe we get some oil service stocks. I think Rig is one of them. So Rig is trading at, this is Transocean Limited, offshore drilling. Just kind of stuck at a fantastic move from the 3s all the way to the 5s on a percentage basis. That's terrific. Think of it as 300 to 500. All right. And it's pulled back sharply. If the report comes out and for any reason this week it tries to touch 4, I think that'll be the action that I'd be looking for and say that is excellent. But if it does nothing, or if it breaks under 338, it's trading at 359 right now, I'd be a little disappointed. So we're going to be watching that one very closely. A couple of things I wanted to look at here. Just let me do this for 1 second. I need to just do that, and then I can flip back. Yeah. So what I am looking at here is within the context of, just want to do this if you don't mind. We're talking about... there it is. Okay. Yeah. So within the context of the markets, I'd said we're going to watch this, the E-mini. If the E-mini is able to move into the 44.16s, that's going to be a good sign on the day. Certainly the 44.22s will be fabulous. So within that context, there are different sectors. We looked at the crude oil just now. I'll do it again. Crude oil is holding quite nicely. It's down a little bit. It's down 71 cents at 73.24, but it is in this upper level. It's gone above the Chapman wave inside. So there are a couple of techniques I talk about in my work. I'll do this quickly and just to show you. So there's a pattern I talk about. It's called the falling axe. You make lower highs and much lower lows, and then you form some support. And then all of a sudden you break that trend line down. It can give you a 1-to-1 to the upside, or at least the same parallel move, and it could take you to the left side higher or even higher. So this is the pattern we're looking at right here in the crude oil. It's broken above that resistance line. It's also Chapman falling, there's a falling axe formation plus the inside track. Now what we're looking at, I'm not sure I want to just yet, I haven't got enough evidence yet, but normally I'd be saying, look at this. You can have a 1-to-1 to the breakout to the upside, and that, let me make this nice and thick so you know what I'm talking about right here. I'll make it blue, and then I'll change the intensity of the color, transparent. Let's make it 60%. And then what I normally do is I go to a low in the 1-to-1 breakout. I change the color, I make that pink. You don't have to do all this fancy stuff. You can just do a trend line is fine. And I usually take it from some kind of a low. In this case, I'm going to go to the 50-period moving average. And I'm just going to say, to be conservative, if it's going to move, it has to move in the same angle, and it has to get to at least 74.50 by about Wednesday without breaking down, without breaking under 71.10, 71. And if it's able to do that, I'm going to say, there's a chance now that crude oil could actually make its way to the 76.98 recent high of July the 6th. That's the way we do it. And if this starts to fail, I immediately grab my arch formation, say, whoops, dreaded H failure patterns are possibilities. You're always fighting one pattern, an up pattern and a down pattern. And it's how it breaks. Look, this is the down, and it continued down for a 1-to-1 to the downside. You remember when I did Tom O'Brien's show on Friday, I spoke about Amazon. I said, look at this 1-to-1 to the downside. I have a whole bunch of rules. I set them out very clearly about what should happen over the next 2 bars, maybe 3 bars. It depends on whether it takes out the high. Amazon was broke down in the dreaded H pattern. What does that mean in the Chapman wave methodology? So I didn't mean to do all this, but I'll do it because I've spoken about it. That means when you take out, if you pull back sharply and then bounce, and you only make like a peak A or a peak B, 2 peaks, and then you fail, there's a good chance you're going to come back and retest that low. If you take out that low with poor technicals, you can go 1-to-1 from the arch formation down to the bottom of the left side low. And this is exactly what, look, this is the one that I did. I just moved the bar because it was cumbersome. Look, we're not quite there yet. But this is the pattern, and it says be careful, because on a gap down, if there isn't a close above the gap down bars high, if there isn't a close above it to say, hey, there was a mistake, I'm trying to get back at least some of it into the gap, it says no, it was a legitimate pullback because there is no strength now, and it has to retest the low, in this case 3506.98 in Amazon. So Amazon's telling us that all is not 100% okay in the general market, and it's very selective. And that's the reason why for subscribers to my opening call, we have become very selective. And we were long the Dow. It took a little bit of a couple of times, taken a little bit. We've had really good profits, but it's a trading entry. We are long from way back last year, in March of last year, April of last year. But that's not the issue. This is trading position. So we got taken out for a little bit of a gain. It was a much nicer gain. I'm going to try to get back in because I think there's enough residual strength to say we're going to try to make new highs this week. We can try. Maybe we'll fail, but we're going to try. And that's my stance right now. I still feel quite bullish, but so selective. Oh, why does it keep doing that? It's so selective that you can see now we've lost one of our big winners in the NASDAQ, which is Amazon. So let's look at Adobe, which is also one of the fantastic stocks. It's up near all-time highs at 621.52. It's down only 83 cents. The high was about 7 days ago. Yeah, about 7 days ago, with a doji candle peak F on the 23rd of July at 631.64. What a monster. Just the last buy could have been at 204.95. That was the low back a year ago, July a year ago. What was it exactly? Oh, no, December of 2018. I'm sorry, 2018, 204.95. And look at this, using my techniques, look at the green 9-period moving average. It is way above. Let me just open this up a little bit there so you can see it. So Adobe Cloud, Digital Commerce, ADBE. Oh, wow, it's down 69 cents today at 620.95. Here's this cup formation. It failed the arch formation, which is a big positive. Held the rectangle formation. I can get rid of this right now. It doesn't mean anything because it's done. Let's get out of that. And now what we're looking at is we've got a little cup formation. And if you look at the left side, high, of that 23rd, and you look at where we are today, you'll see that the technicals are actually quite weak. And it says there could be a little bit of a pullback here, and there may be some retesting, but the technicals, the 9 is still a very big positive above the 14, but the price is starting to get closer and closer towards the 614 period moving average. So we're going to be watching this closely. Huge leg B, peak B, actually in the weekly chart. And if there's I have to have an alternate counter, either E, which says be a little careful, or B, which says, are you kidding? Any pullback you want to grab. At this point, I don't need to worry about the monthly chart. I'm just looking at the daily, and that says there's a recycle, probably if it's going to go much higher into the 638, 640 area this week. But it's going to be really important for the NASDAQ to be able to show some sustainability in the rallies. I'll be back in a moment. Basil Chaplin sitting for Tommy O'Brien. This is the Market Kickoff show. I'm helping out Santiago today, so we'll see what happens. Dow's up 140, S&P's up 20, and we'll be back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Do a couple of things here. Look at the Dow's up 203 right now. INDU. That's really important. We're getting close. Oh boy, 35,138. We need to get about another, I'd say another 60 or 70 points. Says you've cleared this. You're not doing the pie formation anymore, and that's going to be important. Look at the S&P, SPX. There we go. S&P. Now it's got a little bit further to go. It's at 4418. High was 4422. It's got to get to the 4450s. It's a long way to go. And let's see the QQQ NDX 100 trading vehicle. Ooh, just turned, got a red candle. It's still up, but it's really struggling. This is the area that's struggling. That's what I was saying. I think that Amazon report is a big thing. Oh, I'll do a little bit of this in my show when I do my 10 o'clock show, the Tiger Technicians Hour. And just talking about inflation, deflation, and what reminded me of that is that in every sector, what we're looking at in the general market, what we're looking at in the general population, what we're looking at internationally, in everything that we're looking at, there are positives and there are negatives. There's nothing that's all bad or all good, and that it's a very healthy thing to have some kind of leadership that keeps taking over when something else is weakening. That's since the summer of 2010. We've seen that in the market, except for the one or two really big pullbacks, like that March 39% slide in the Dow into last year's low. That's certainly, we would think that's normal, but that's really an aberration, because most of the time it's between 5 and 12% pullbacks, and then you're back to new highs. So in every aspect, whether it is inflation or deflation, you can pinpoint, look, we had a tremendous shortage in chips. Oh, yeah? The SMHs are trading right at this, as we speak, at an all-time high of 266.19. I kept falling for this thing, and I spoke to car dealers individually. I called a couple of them. I said, listen, are you getting new cars on the lot? Are you getting 2022 cars, or you still call them 2021? And to a dealer, they said, no, we're having a terrible time getting new cars. We're talking about 2021 as much as possible. We might not even get 2022 until November, December. This was about 4 months ago. November, December, maybe even 2022. And yet we're looking at the semiconductors at an all-time high. You know, it's not what you read, it's what you see. And I'm seeing here that the semiconductor area is flourishing. And all I can say is, yeah, you've got the leadership. Look at this, AMD, Advanced Micro Devices, just off an all-time high. You've got AMAT, Applied Materials, one of the great semiconductor companies, also just under the 146 round number all-time high, so 144.29 right now. It's only leg B in the daily chart. Unbelievable. So yeah, I don't see I don't understand what's going on. I don't know why they even spoke to us about this chip shortage, because it was a selective chip shortage. I remember Dave White at one point. I asked the question, and he said the auto companies are just cheap. They will not. They should have been buying chips, and they weren't buying chips, and they're the ones that are suffering. I think that's absolutely 100% correct. It is selectivity, and that's what we're going to see. If you look at this, wheat. Huge move up in wheat. Thus, wheat is up 19 3/4 at 723.5. I mentioned that because we are long. The DBA, which is the DB Agricultural Fund, we've been long for a long time, is done very well. But look at this. Wheat is up huge. Wait a minute. So does that mean soybean is up huge? Well, have a look at this. Soybean is down 3 at 1346. It's stuck in this rectangle range. Wait a minute. Corn, or corn, as we say here in the Boston area, corn is trading up a fraction, up 5 at 551, and is stuck in the range. So this is what I'm talking about, the selectivity. If you can get the right instruments, the right area. We're fortunate in my Tiger Technique, in my opening call newsletter, that we have a couple of areas that are really working so well. And we had last week, we had at least five of our positions make all-time highs. On Friday, there were a few. And we'll see what happens if today they can continue doing that. I suspect they're just about to have a little bit of a reprieve and a little bit of a rest, some of them. And some of them are still working. So all I can say is this is a period, and I mean generally all the way through, you can name the area. It's a period where selectivity is important, choosing the right sectors or the right stocks within a sector is really important. And you can say, how on earth could there be a shortage of chips when the semiconductors is going higher? And yet when you look at that, look at an Intel, the wrong company in the wrong area doing the wrong thing, and it's trading down the 54s after making a 67 or something all-time high. It's not even close to the all-time high. Selectivity, that's the whole thing. So I just wanted to go through that as a kind of an overview. Let's look at the TLT, which is the bonds. TLT is the Lehman 20-year Treasury bond fund, or 20-year or higher. And look, stuck in a range. When you make this topping formation, and then you can't break out of it. Look, it went to 152.72. It's trading with a high around about the 149s, pulls back sharply to the 145s, comes back, counter breaks significantly, and then suddenly pop in 2 bars. It goes to 152.72, and then what does it do? It comes back, and now it's struggling within this. I'm going to get rid of the Fibonacci right here. It was important when it was important. Right now I don't need it. Let's get out of that. And I will draw in the pattern that I think is most important right now. It's this long rectangle right there. Although it's not really a rectangle because it went below and above. It's really like a sine wave. This is the midpoint. It's like a split with your barbecue, right? And you went up and you went down, and now you're stuck in the middle. If at any point in August there is a push into the 154, 155 area in the TLT, that means yields are really going to scream to the downside. Meantime, they're stuck in a range, and you're looking at if there is a pullback now to the 146s, this is a 149.34 right now. You go to the 146s, and all of a sudden, those yields are going to become important, and it'll become important where? I wonder if I've still got this notated. Toll, very nice move. Toll Brothers in the housing. Let's see, ABC, leg C right now, and it's doing nicely, but it's had a big pullback from the 67-ish, 68 high, most recent high back in. Let me just give you the exact number. Toll Brothers makes the high back in. The week of the 14th of May goes to 68.88, and then it comes down. It goes under the 200-period moving average, acts as a springboard, hits 52.02, and now it's trading at 68 points up. That's what, 12, 13%. That's a nice move up, and we'll see, because if I'm going to draw some trend lines, look, I take the outer wicks right there, and the lower wicks right there, and I've got myself a little channel. And that channel says right there that you can go. I like to be strict here, so I'm going to be right there, pulling back. There it is. And I'll make that green. And that says, you know what? If Toll Brothers, and this is an important phase because of the rates that are just stabilizing here, if Toll Brothers is, I've got a Chapman Wave inside track repellent zone, and it repels for a moment, and now it's gone out of that zone. That makes the whole 57 to 56.5 area really important support. If Toll Brothers is able to get into the 6150s, it's at 59.91. This week, it's saying, hey, rates are not bothering us in the least. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Representing for Tommy O'Brien, market kickoff from kicking off with the Dow 208, the S&P is up 19, the QQQ, and this is going to be important, is now back. It's given back some of the gains, only up 15, and I'd spoken about selectivity. I just wanted to show you how important these narrow rectangle formations are, how the price is like a magnet. Look at that 200-period moving average in the E-mini. This is a 2-minute chart. It doesn't matter. It's the principle of the whole thing. Repelled, 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 magnet, then repelled. So until I'd say 416, it hasn't got there. It got to the 414s. Until it can really get to 4416 and then push to the 4422s, that's key. And remember, I was talking about those. I think I forgot to mention that after that 10-minute chart rally to that peak E, as I was speaking about the 200-period moving average, it had 2 peak Ds, the fourth highest peak, and then pulled back. And the last one came back and gave you the arch formation, dreaded H. So far, it's successful. It's looking like an H going to an M. But if it starts straight hold under 4,400, that's going to be a big deal. So this is a very selective. This week is going to be one of the most selective weeks, I think, in the whole market, because it's telling you that you've got some breakdown in key stocks. Like I was saying, Amazon. Let's see where it is now. You never know with Amazon. Right, look at this. It's up 3. And after that big smash to the downside, all it can do is try to rally a little bit, and it's even fading there. It needs to get into the 33. 80 to 34.05 area. So anytime this week, he just has to have one little pop to the upside. But we'll see. This is going to be really important because we're looking at a rotation that says slowly but surely we're whittling away at what's really been working. And those things are starting to, they're not having the same strength. And now the leadership is getting more and more selective. And that makes me a little concerned about maybe later this week or early next week. That's all I'm saying. I'm getting a little concerned. The market has to prove itself. A couple of things I'll do just as we're about to go to a break. That's enough for that. A couple of things I want to look at here. So we've got earnings today, but not the really important stocks. They're important, but they're not as important as normal. But what I had said is that you want to see how the whole transportation sector is doing. Look at this, IYT. It's up 220 right now, but it's stuck in the lower part of the range. The divergence in some areas and strong in already prominent right now. Look at this. The transports are down at the weekly lows, and the Dow is close to all-time high. I mean, that kind of divergence. We'll talk about it when I get back from my Tiger Technicians Hour in a few moments' time.